Bijoy, thank you so much for your time today. We're here to talk about fixed income. What are the macro themes which have been driving fixed income generally?
I think the standout theme is inflation.
Right.
So I think everybody who's listening will know that we've had inflation rising literally all over the world. So the impact on the bond market is clear, yields rise.
Right.
But what's most interesting is if you look at particular markets, let's say the dollar market, and investment grade corporate bonds. So we're no longer talking about high yield, investment grade corporate bonds.
Yeah.
There you have a yield of that's pretty much equivalent to the expected return on equities. So you're in a situation where if you're managing institutional money, you now have the choice. Do I invest in equities or do I invest in fixed income? And given valuations in equities, I would actually go with the fixed income. So I think there's going to be an allocation, a much larger allocation, which is actually being borne out in the market. You see this or you hear about it. So flows into fixed income are picking up. So the anticipation is that the data requirements are going to pick up, and this is where we can assist.
And what types of data are being requested right now?
With our clients, we're seeing data across the board. So we have obviously our speciality, which is reference data.
Okay.
We also have corporate actions on those bonds. And finally, pricing, which is, in the case of the bond market, it could be market pricing or evaluated pricing, because one thing that, let's say, remains the same given all this change with the inflation, the thing that remains the same is the bond markets are illiquid. So evaluated pricing or the need for a fair value has not disappeared.
Yeah. Just zoning back into Asia Pacific. I mean, tell us about developments there. I mean, Japan's a big market, but also outside of Japan, lots of potential instruments there that could be invested in. Tell us a little bit about what's happening in Asia.
Well, I think just to go back to Japan, that's really one of the big drivers in the region. So you've got inflation, the same theme. You've got 4% roughly handle on inflation in Japan. So that's a level that we haven't seen for 30 years.
Yeah.
That will drive a lot of the dynamics of what goes on in that, well, certainly in Japan, but that will have an impact outside of Japan, because Japanese investors who are massive investors outside of Japan, as it was the first country to experiment with quantitative easing. So if they were to normalize interest rates in Japan, there's no way that would not affect bond markets across the world. But if you like, from an investment perspective, in a positive way, because the yields will be supported. I think that's the message. And given that yields can be supported in now multiple ways as various central banks unwind, you have an investment case because there's some longevity to the story. It's not just a very short, sharp inflationary pop and then everything dissipates and we go back to bonds in negative territory. I think you can now think about investing in fixed income data. Yeah.
Sounds like the fixed income market is here to stay. Bijoy, thank you so much for your time. It's been a real pleasure. I hope to see you soon.